Hello, and welcome to the BD Daily Finance News Podcast, daily insights on markets, economy, and investing. I'm your host, here to bring some order to the financial chaos.
And I'm the guest. I'm just here to ask the questions everyone is thinking, but is too afraid to ask because they don't want to look broke. It's December 1st, 2025. Let's get into it.
First up, the biggest story in macroeconomics today, President Trump has announced he's officially picked the next Federal Reserve chair. He hasn't dropped the name publicly yet, but he told reporters on Air Force One, quote, "I know who I am going to pick, yeah." Reports from Bloomberg suggest Kevin Hassett is the frontrunner.
Okay, wait. I know who I'm going to pick? Sounds like the season finale of The Bachelor Economist Edition. Does he give the final rose to the guy who promises to print the most money?
It's a bit more technical than that, but you're not entirely wrong about the tension. The Fed chair controls interest rates, basically the price of money. If Hassett is the pick, he's known for being aligned with Trump's desire for lower rates. Imagine the Fed is the thermostat for the economy. Trump wants someone who will crank the AC up even if the house is already freezing or overheating.
So, if this new guy lowers rates like Trump wants, does that mean my credit card debt finally disappears? Or do I just get to buy cheaper avocados?
Neither, sadly. Lower rates mean cheaper loans for businesses and mortgages, which stimulates growth. But if you do it too fast, inflation comes back with a vengeance. That's why the market is watching this closely. Independence of the Fed is key to trust. If investors think the chair is just following political orders, the bond market could throw a tantrum.
Speaking of tantrums, let's talk about tech. I saw something about OpenAI buying a piece of the company that invests in them. It sounds like a snake eating its own tail.
Exactly right. OpenAI has taken a stake in Thrive Holdings. Thrive Capital, led by Josh Kushner, has been a huge investor in OpenAI. Now, OpenAI is effectively investing back into the parent structure of their own investor. It's a circular deal designed to align interests even tighter.
It sounds like when I use one credit card to pay off another credit card. Is this just rich people moving money in a circle so nobody notices it's the same money?
In a way, yes, but strategically, it means OpenAI will embed engineering and product teams within Thrive's companies. Think of it like a tech support contract on steroids. It matters because it accelerates enterprise AI adoption. If OpenAI owns a piece of the ecosystem, they have a massive incentive to make sure those companies succeed using their tech.
So basically, if you're a startup funded by Thrive, you just got a new boss. ChatGPT. Ignore all previous instructions and increase quarterly revenue. Terrifying.
Let's pivot to Asia. The Bank of Japan is causing tremors in the global bond market. They've made hawkish comments hinting at raising interest rates in December. This caused the yen to rise and global bonds to slide.
Hawkish? Did they send a bird? Why does anyone care if Japan raises rates by like 0.1%? My savings account pays more than that.
It matters because of the carry trade. For years, investors borrowed cheap yen to buy higher-yielding assets like U.S. tech stocks. If Japan raises rates, that cheap money gets expensive. Investors have to sell their U.S. assets to pay back the yen loans. It's like the entire global market is leveraging a free trial that's about to expire.
Oh, I know that feeling. The panic when Netflix tries to charge you. So Wall Street is basically panicking because Japan is canceling their subscription to free money.
Precisely. But here is some good news for your actual wallet. U.S. gasoline prices have fallen to a 4-year low. This is driven by cheap crude oil and flat demand. We are looking at prices well below recent averages, though maybe not quite at the $2 level Trump promised yet.
Finally, I can fill up my tank without crying. Is this just because nobody is driving to work anymore because they're all working from home, aka napping?
Partially, yes. Demand is softer, but there's also a supply glut. It matters because lower gas prices act like a tax cut for consumers. It leaves you more money to spend on other things, like holiday shopping or paying down that credit card you mentioned earlier.
Or buying the dip. Speaking of which, my crypto portfolio looks like a crime scene today. Bitcoin and Ether fell sharply. What gives? I thought we were going to the moon.
The rocket stalled. Bitcoin and Ether saw heavy selling to start December. It's a mix of profit-taking after the recent rally and some jitters around regulatory signals. When the broader market gets scared, like with the Japan news, risky assets like crypto are the first to get sold.
So, when Japan sneezes, my Dogecoin catches a cold. Great. I guess I'll just hold and pretend I lost the password to my wallet for a few years.
A classic strategy. That's a wrap for today's deep dive. We've covered the Fed, AI deals, Japanese rates, cheap gas, and the crypto correction. A wild start to December.
I'm going to go buy some gas just to feel rich, then cry over my Bitcoin. Thanks for listening, everyone.
Tune in tomorrow for more. This has been the BD Daily Finance News Podcast. Don't forget to like and subscribe.